Welcome to Bitcoin Escape Plan. The topic of today's video is how stablecoins will change Bitcoin forever. This is a free preview of the paid newsletter that you can check out over at bitcoinescapeplan.com. It'll be up in a little bit. Once I'm done recording this video, go subscribe over there to get this over there faster than you can anywhere else. Anyways, let's start off these videos like we always do with the 4-hour chart for Bitcoin. So as you can see, in the last couple of days, including right into Christmas itself, we had one more attempt at these key levels that we were talking about all last week. So 90.4 was really the one that mattered most. We failed that on Monday, have been going down ever since, and really just been chopping, consolidating. And like I said in my 2025 prediction video, which was super late, I will admit, I didn't think the price was going to be above 94K, and that looks like that is holding true. We are nowhere near it. There's nothing really on the higher time frames that is communicating to us that that'll magically change. And at the moment, we are just looking to get back above this level so we can simply retest the same level again. But it doesn't look good at the moment. So I would imagine we continue to chop and probably are going to make another attempt down to here, closer to 85 than we are back to 90. But really, the year is coming to a close, and I think that the market is just kind of waiting, while we see what's happening with gold. Gold is at new all-time highs. SPY is at new all-time highs. So Bitcoin is just kind of the stepchild that's not getting any love or attention right now. And maybe that changes in a couple weeks, or maybe this is signs that we are already in a prolonged bear market. But the topic of today's video is really more about stablecoins than Bitcoin itself. Subscribe, let me know if you're enjoying these other types of videos that I'm making. So let's go over and take a look at DeFi Llama just to see kind of what is the story of the market cap of stablecoins. So stablecoins as they currently exist are overwhelmingly, Tether is still, the dominant one by a hefty majority. I don't know if this one shows. This one doesn't show the exact percentage, but if there's just over 300 billion, so 308 billion according to DeFi Llama, 186 billion of that is Tether itself. And the only other one that's even close is USDC, which is about 76 billion. And the market cap of USDC has fluctuated a lot over time. I believe that Tether is, more consistent with this one, where it's just pretty steady up and to the right. And then obviously peak of bear market, people are panicking. Demand is going outside of cryptocurrency at this point. It's moving into the other markets until it starts moving back in this direction. But as you can see, the shape of the chart is pretty clear that it's just going to continue to rise over time. So if we go and look at the Bitcoin market cap, it's very similar. It's a little bit more meteoric in the case of Bitcoin itself, but you'll notice a lot of similarities between the two. This isn't quite a sharp uptick. There hasn't been as much of an increase in demand for stablecoins as there has been for Bitcoin. But as I talk about in the newsletter, that's about to change dramatically next year with these stablecoin acts once they go into effect. Once JP Morgan Chase and Citibank are able to just print hundreds of billions of dollars of these stablecoins, it's going to dramatically change things. And I think it's important that we kind of we don't disconnect the fact that this market cap is going to continue to rise forever because they're going to continue to print dollars forever. And I'll get into that later in the video with the U.S. national debt and why that's the case. But specifically, if we're going to look at other assets, for anyone who's still wondering if we're going to experience an alt season, this is the market cap for Ethereum. And as you can see, it's also up and to the right, but it's a lot more volatile. And really, at this point now, we've waited all this time, 4 years, for it to just get back to the same levels that it was there before giving it up. Which, obviously, if you're investing simply in stablecoins, you would not have experienced as dramatic an expanse of your wealth as you would in something like Bitcoin. Like the price over here was like $15,000 per Bitcoin. The price over here, even in a downturn, is almost 90K per Bitcoin. So it's much, much different than the price of your dollar here is $1. The price of your dollar here is $1. The price of your dollar here is $1. So it's not that like the amount of money that you're going to have in your account dramatically goes up unless you're staking these. And most places you're not going to get like staking yields that crazy for USDC. Like not really in excess of what you would already get holding a treasury bill. Probably some things on chain that you can do, but even like I was looking at Aave recently, and it just like doesn't really seem like your borrow rate is that dramatic. With at least the dominant stablecoins, you may be able to go down this list, to some of them that are less prominent, and you might be able to get higher yield on them. But for the safe ones, for the ones that are actually transacted en masse, it's just like not that competitive of a market to stake them, unfortunately. So what does this mean? What does this mean? If all of that money is being printed into stablecoins, if more and more money is being printed into stablecoins, well, it's going to Bitcoin. But why isn't it going to Ethereum? Ethereum is where a lot of these are on, and it's multi-chain now, so these exist on multiple chains, not purely just Ethereum. But I think that's something that we really need to take into account and remember as we're thinking about this narrative of, when the stablecoin volume explodes, as it continues to explode, how is it going to affect Bitcoin and the other assets? So if we want, let's go take a look at a couple of the other assets. Take a look at good old XRP. I don't know what the hell that was. That's not what I wanted to press. So very similar, like why that chart looks terrible. I always feel so bad for anybody who invests in XRP. That chart looks terrible. Like sure, maybe it recovers and it continues now, but it looks so heavily manipulated. It just does not look like a healthy recipient of any of the money that's flowing into the crypto markets via stablecoins or anything else. Here's BNB. BNB looks a little bit healthier, certainly more healthy than Ethereum. But this is just like BNB is only like has so much demand because of how many people are using Binance. So it does facilitate something, like it is doing something. Solana, let's go see what Solana has in terms of how it's been affected. So very similar to BNB, where it's kind of like right at the market cap highs of where it was. It's pumped, but hasn't really been relevant. Even recently, the market cap of Solana has pumped pretty dramatically from where the price was actually doing well. The price was in highs over here, and I believe over here. So the market cap does seem to be moving a little bit, but again, very different to good old Bitcoin, where it's just more clear that it's up and to the right. Like that's a more clear trend than anything else we have on chain. It's even affecting things strangely like Circle itself. Where is it? Now, this isn't one that I follow that frequently, to be honest with you, because it just doesn't really make that much sense. Oh, see, there you go. Now it's probably the time to pay attention to it. So when this first came out, and for those of you who don't know, Circle is the company that owns USDC, which is, again, number 2 only to Tether in terms of the stablecoin market. So when it first came out, there was a bunch of hype around it, and the price exploded, and went up only for a while, and then has apparently peaked. This is not one that I've been paying attention to. And it's gone down in value. And I would imagine that's partially because people realize, oh, okay, well, this company is not going to be not going to be a linchpin in whether or not the stablecoins of the future continue. And I think this is something that people forget. This list is going to look really different in 2027. JP Morgan Chase coin, Citibank, Wells Fargo coin, like that is going to be what it looks like 2027, 2030. It's going to be like big competitors that may be built off of some of the rails for these. But, even this is, I believe this is the Trump one. another one that I don't pay attention to that much, and that's still so small relative to this. So really the ecosystem is just going to open up to other competitors, and this is Circle. They still have a healthy distance between them and all the smallest competitors, but we're at the point in the market where people were behaving irrationally and putting money towards a company that like literally they issue stable coins, and they're not going to be the sole issuer of stable coins. So anyone who's making that same mistake of, they're wanting to bet on one company or on, like, for example, this is why a lot of people like XRP is because, Ripple has the ability to create stable coins. That's so small, just barely more than $1 billion. And again, in a $300+ billion pool. I think people really underestimate how much money is going to flow directly to the banks because it benefits them to use their own coins instead of using, something that is essentially controlled by a US company. Why would all of the banks on the planet choose to allow a company like Circle to have control over their asset flows instead of creating their own? It just doesn't make sense. So for that part of the video, that's really what I want people to wrap their heads around. It's just the fact that there's going to be increasing competition for these stable coins moving forward, but there's still two clear winners out and ahead. DAI used to be more relevant. It really hasn't been in a while. Sky, I'm actually not positive. USDS, I've heard a little bit about it, but I haven't heard enough. I just know it's like more used in DeFi, I believe. But this is the other one that I think is pretty important to pay attention to. And PayPal as well, I think, is one that over time, as more demand comes from global customers for stablecoins, it's not going to be trivial for some of these companies to already have a leg up because this total market cap is just going to explode. That's going to be in the trillions in the next couple of years. Whereas something like Solana is not going to be in the trillions necessarily. Ethereum is not going to be in the trillions. It's at only $50 billion more dollars than there are currently in all of stablecoins. And I really think that that's something that people are misunderstanding about what's actually going on, which leads me to the national debt clock. And this is the point of the newsletter. I was talking primarily about like what is the broad play that's happening with more money flowing into stablecoins, because it's not all going to flow to Bitcoin specifically. I think a lot of it is going to end up flowing to changing how we perceive this number. This number is only going to continue to go up forever. So the best thing that we can do is get these numbers to go down again. That's crazy. That's double what it was in 2000 or in the 1960s, let alone in the 80s where, it was a much healthier, the amount of debt that we had to the actual gross domestic profit of the country. So I think what they're going to do is they're going to continue to increase their ability to confiscate Bitcoin so that not necessarily the GDP won't go up, but they'll be able to borrow more against the reserves and create more, basically to create more debt. That's what they're going to continue to do forever. They're just going to continue to prop up the Federal Reserve so that it's easier for them to revalue their existing debt as being worth less. That number is never going to stop going higher. The problem is we're never going to pay it back. There's going to be no effort to pay it back. I think that's something that people misunderstand when Trump says that he's going to use Bitcoin to pay it back. It's not like they're going to hold it now and then in 10 years exactly they're going to sell a portion of it to pay this down. That's just not how the government really functions. They're just going to continue to find excuses to confiscate Bitcoin from other people to continue to add to the reserves so that they can continue to print more treasuries and just continue the cycle forever. They need to be able to continue to spend. That's all that they know how to do, is continue to spend. So again, this number will continue to rise forever because they won't be able to help it otherwise. And specifically what I go into more depth in the newsletter, we're going to be shifting the US debt demand. Maybe let's go over to DXY for this one. We're going to be shifting the demand for the dollar from being primarily specific strategic partners, countries like Japan or China or Russia. We're going to be shifting that demand, and this is the 80s. Again, if we look at here, this is when the federal debt to GDP was 34%. And over here, that's the strongest the dollar's ever been, is right after that effect. So what happened? And what happened really is that we outsourced all of our ability to generate profit and revenue outside of the country and continued to take out debt. So what's happening with the JPY or the Japan carry trade, with them starting to produce positive yields for that instead of flat yield, more and more money is going to flow out of the dollar. And unless the U.S. government can find a customer for U.S. debt, this is going to drop off a cliff. It's going to continue to lose and lose value, which is not going to be good for the American people or really anybody else who's planning on storing value in dollars. It's just not going to be a pretty sight. So what they're effectively doing with these stable coins is they are, say I'm JP Morgan Chase, and I want to issue my customers X amount of dollars that they can use instead of having to use wire transfers. Well, what they're going to do is if I'm JP Morgan Chase and I've just created $300 billion out of thin air that I want my customers to be able to have access to, I now have to go buy $300 billion worth of treasury bills or cash equivalents, essentially. So now as the U.S., I now have to pay out more to those people who are buying the debt, which is the banks. So effectively, we're going to create this symbiotic relationship where the banks are the ones who are actually receiving the payments from the U.S. government for continuing to buy their treasury bills. But the banks are only buying those treasury bills because of the demand from the people who are using the stable coins themselves. If that sounds confusing, it's only because it's like maniacally simple and brilliant. Like previously we needed to have trade relations with countries like China and Japan where they agreed to take a certain amount of debt from the US in order to finance their buildings, their infrastructure, their businesses, whatever it happened to be. That was the deal. Was the US would give them dollars in exchange for a piece of whatever the revenue was or whatever they wanted to pay out, essentially for that exchange. But now if we're losing to other countries, if other countries are starting to get more and more of whatever business we as the US would have been receiving, our next best option is to get the people of those countries, instead of the businesses and governments of those countries to do trade with. Now we're just going to do trade with everybody. And I think this is the thing that people really, really underestimate is this is just the DeFi and like current market of people who are using this to either, borrow so that they can buy more Bitcoin and things like that. For other more complicated smart contracts exchanges, they're using stablecoins instead of something like a Bitcoin. So like we're still in the early days in terms of the actual demand for this. When this demand becomes, total foreign currency exchange, is mostly the US dollar right now. Like that's not on this page, but the US dollar is in, I believe, like 89% of all foreign trades of any currency from one to the other. So when you're factoring that in, you got to remember that 90% of trade This currently reflects, I don't know the number offhand, but I would imagine less than 1% of that. Like, I would imagine this is a tiny fraction of the total amount of money that is currently transacted in US dollars. And very soon, it will no longer be transacted in US dollars. It'll be transacted in JP Morgan Chase coin, in Citibank coin. Tether and USDC will remain, but increasingly, this chart is going to be full of banks who are borrowing, or not borrowing from the US government, but who are buying treasuries from the US government and being paid by the US government in the forms of the revenue from those treasuries in order to sustain the demand for the dollar. So that's what I think people need to wrap their heads around, is the dollar dies unless we find a new buyer for it. The new buyer for it is not our allies. It's every citizen of the planet who currently has another currency that they are paid in that does not hold its value. So if I live in Argentina, if I live in Venezuela, if I live in Nigeria, if I live anywhere where the future of my currency is uncertain and volatile, more so relative than the dollar, that means that those people, when given access to it, same as they are given access through something like USDT or even PayPal, I believe that this can be traded right on PayPal. PayPal has hundreds of millions of customers around the world. Increasingly, we're not going to go through the governments and the businesses of those countries to ask permission. We're just going to offer the stablecoins to those people in those countries, which is effectively taking it from, us having however many countries there are. I forget if it's 178 or 278, whatever it is, less than 300 countries on the planet that we could potentially have a trade relationship with of varying degrees of each, versus 8 billion people on the planet that are going to have some form of access to stablecoins, other than when they really, really, in places like North Korea, where they're going to do their best to prevent people from doing it. It's still anywhere where you have access to the internet and you can get on a Web3 browser, you're going to be able to have access to stablecoins, which gives you exposure to the US dollar and forces the issuer of that stablecoin to purchase more either cash or cash equivalents or treasuries, which keeps this chart from dropping off a cliff and keeps the US as a dominant reserve currency on the planet. This is something I'm going to talk about more once the stablecoin bills actually go live. I know that there are a lot of things I talked about in this video and in this newsletter. So please let me know if you have any questions. Feel free to ask them. It is a complicated one to really wrap your head around, but effectively, if you've heard narratives about CBDCs, or just of them trying to get rid of cash in general, this is what they're talking about. This is what's going to happen, is money is going to flow not just into things like crypto, like we're seeing Total 2 get completely obliterated right now, where we've made it back to 2021 highs and just are not doing anything. This chart just does not look good. Hasn't completely given up yet, but there's not really enough reason to assume it's magically going to explode the other direction anytime soon. It's not like a safe trade like it was in previous times. Not all the money is going to flow directly to Bitcoin either. We may have, if all of that money is flowing into the markets and we're essentially going to start tokenizing the stock market and the real estate, there's nothing preventing that money from flowing out of something like Bitcoin into something like real estate or the tokenized stock market if people believe that they can get a better deal or more performance in the short term than they can with something like Bitcoin. So trillions of dollars will flow into these stablecoins. It does not mean that all of it is going to go into Bitcoin overnight like it used to. We can't assume that Bitcoin dominance is just going to rocket up, it's probably going to chop. So if trillions are printed in stablecoins, a good amount of it is still going to flow back to Bitcoin, and we will experience kind of passive flows the same way that, the stock market does or real estate in general does. But we're really going to have to be patient in the short term because there are going to be enough people who see what's happening and see how we're shifting in the landscape of how many stablecoins are rapidly available. And when money is cheap, they will look for other ways to get better returns than Bitcoin, which is largely a safe store of value, is still the best narrative. So be prepared for, if we do see an alt season, that's when it'll be, is when we actually are at the most pain for Bitcoin specifically, I believe, because then the money will flow, I think, outside of crypto first, and then it will trickle back into crypto after, because it'll create more pain for the altcoin holders. Most of us will have already sold out by that point, and it'll just be the new people who had early access to the stable coins or who have a vested interest in relationships with the banks. Those people are going to be the ones who understand which of these assets are worth holding and which ones are not. Long story short, this is why I try to keep it simple with things just like Bitcoin itself, because as long as they continue to print stable coins, the market cap of Bitcoin will continue to rise forever. Like that will be true. Everything else on this list, we don't know. We don't know what Pengu is going to do. We don't know what the issuer of a stablecoin that's going to be competitive with JP Morgan Chase Coin and Citibank. We don't know what it's going to do. So really, what we need to prepare for is there's going to be major changes once tokenized assets and tokenized stocks arrive on blockchain. Will that affect the underlying chain? Somewhat, but it's going to be those individual synthetics and derivatives that see most of the value that comes and flows out of Bitcoin. It's going to go there. It's going to go into a 24-hour version of SPY. It's going to go into a 24-hour version of gold, synthetic gold, or whatever, that are put out primarily by companies like BlackRock. They're going to be the ones that are tokenizing these assets. So I think in the short term, Bitcoin is going to suffer because of that. Not in the long term, but in the short term, Bitcoin is probably going to suffer because of that. I'm going to wrap it up for this video. It's been a very long one. Hopefully that was useful to you. Again, if you have questions, leave them down below. And I will talk about this more as the stablecoin narrative continues to change over the coming years. Thank you so much. I will talk to you again very soon.